Hello, hello friends. Welcome to yet another revision session of cost accounting. We are discussing the first chapter, that is cost sheet. In case you have missed my previous video, please go through that first, because there I have discussed the theory of cost sheet. What is a cost sheet? What are the elements of cost sheet? And what are the different types of cost sheet? As far as practical questions is concerned, there are three kinds of questions which may be asked in your examinations. Broadly speaking, the first type is a cost sheet without any stock. If you remember, I had discussed the basic format. After that, we have cost sheet with stocks, and that too we may have a question wherein you have to find out the value of closing stock. If the value is given, then it is easier, but if you have to calculate the value, it becomes a bit difficult. And finally, the third type is dual cost sheet. So in this video, I am going to discuss one example of each type. All the questions and answers that I am going to discuss today through this video is available in my link tree. The link for that particular link tree ID will be shared to you by the end of this video. So, just to start, cost sheet. The basic cost sheet had a very simple format. It started with direct material, we added direct wages and direct expenses. We got prime cost. When we added examples of factory overheads, we got factory cost or works cost. We add office and administration overheads to arrive at cost of production. We add selling and distribution overheads to reach to the cost of sales. If the value of sales is given to us in the question, then we find out. Question number 1 says, from the following particulars extracted from the costing records of a manufacturing company, you are required to prepare a cost statement showing in detail the elements of total cost. So, very simple data is given. They also say, also ascertain the net profit if the total sales is 40,000 and cost per unit if units manufactured and sold are 1,000. See, the last line is very important. When they say units manufactured and sold are 1,000, that means there is no opening and closing stock of goods. Number second, you can calculate cost per unit with a very simple technique, that the total cost, whatever you get, say for example, I see the material cost is 15,093. So 15,093, when I divide by 1,000, my per unit cost will be 15.09. So on and so forth, you can do that. Now, being the first question, things are very simple. As you can see, we have direct material, we add direct wages, we add direct expenses. So we get our prime cost. When I write factory overheads, you have to just be careful. Things may not be given in straight line. It may be scattered. Like I can see factory expenses. Apart from that, if I move ahead, I can see an item called as repairs. Now this word repairs is plain. Nothing is given what kind of repairs. But since we are into costing, we must understand repairs, we refer more towards plant and machinery. There may definitely be an argument that it can be repairs to furniture, or it may be repairs to building, or something else. But then, when the question is silent, in accountancy, there is a very general rule which says that we have to go for the nearest assumption. And based on that, we assume that this is repairs on plant and machinery. And hence, we consider it to be a factory overheads. Moving ahead, I can see foreman's wages. Now foreman, if you know, is a person who works in factory. So my factory overheads will consist of 3 items: factory expenses, repairs and foreman's wages. When I get the total, I add it to the prime cost and reach at something called as works cost. In works cost, I add the office and administration overheads. Again, office and administration overheads, in the given example, I can see office expenses, director's fees and staff salaries. So, my dear friends, if we add these three things to the value of factory cost, we will get something called as cost of production. We add selling and distribution overheads. As I can see in the question, we have advertising and also we have carriage on sales. When we add this to the cost of production, we will arrive at cost of sales. Now, the amount of sales is given in the adjustment kind in the line after the table, which says that sales is 40,000. When I compare the cost of sales with sales, I will get net profit. Let us see how. So the answer is something like this. As you can see, I added material, wages, expenses, and I got my prime cost as 23,733. Now when you look at the entire answer, you must understand that it is not prepared directly. First, what I have written is the total cost column. That is, I wrote direct material 15,093, direct wages 7,220, direct expenses 1,420, calculated the total cost 23,733. Then I wrote factory overheads, factory expense. In the inner column 1,172, the repairs 1,746, foreman's wages 450, total in the outer column 3,368. So I got my works cost as 27,101. Mind well, till this time I did not calculate cost per unit. Further, I wrote office and administration overheads, the office expense, the director's fees, the staff salaries totaling to 2,168. I got my cost of production as 29,269. When I added selling and distribution overheads of 2,085, I arrived at cost of sales 31,354. Then I left one line blank and I have written sales of 40,000. So I got a profit of 8,646. Once I complete this, then what I do is I divide each value by 1,000 and round it off to the nearest correct value up to 2 decimals. So this is how the entire cost sheet gets compiled. My dear friends, remember this is a basic cost sheet without any stock. While calculating, if you get some errors or if you find something different, you can definitely connect to me. I have given my contact details at the end of this PPT, as well as you may approach to me directly and clarify your doubts. We move on to one more example. As I talk to you, I repeat that all these questions and answers have been uploaded in my link tree, LINKTREE. There is a link which will be provided to you and you can access all these things. So, in my link, I have put up cost sheet questions, and in that question number 6 stands something like this. Now, the very interesting thing, I'm sure your eyes directly go to one question mark in the entire table, and that is of finished goods 400 tons. What does that mean? You have to calculate the value of closing stock of finished goods, which is 400 tons. If you remember my theory session, I had already mentioned that the cost of finished goods, that is the closing stock of finished goods, will be calculated on the basis of cost of production per unit. Now this is where the cost per unit column assumes significance. Let us see what it talks about. Since we are having raw material opening and closing stock, we will not start with direct material. In fact, our starting point will be raw material consumed. The formula will be opening stock plus purchase of raw material minus closing stock plus carriage inward. Then we add direct wages. When we add these two things, I am not able to see direct expenses. Mind well, if while preparing cost sheet, you don't see direct expenses given in the question, then there is nothing called as, there is no example to say as of direct expenses. If direct expenses is given, it is there, otherwise it's not there. Proceeding further, we add factory overheads. When we look at factory overheads, I can see rent, rates, insurance and other works on cost. Now this is a technical term. On cost refers to overheads. So works on cost is works overheads. Works is factory. So basically works on cost is factory overheads. Likewise, I can see supervision, which is a factory charges. So these two items will come under this category. When it comes to office and administration overheads, there is a clear item of office overheads. Then we will get cost of production. Here you have to pause a little. I will just take you to the solution column. Before I do that, one very important thing is, since there are stocks involved, here the units produced and units sold will be different. Right after the table, we can see that 3000 tons of commodities were produced. So if 3000 is produced, that is units produced. So till this time of cost of production, all values will be divided by 3000. But since stocks are related or given in this question, the units sold will be different. Very simple thing. I have an opening stock of 200 and closing stock of 400. The formula is opening stock plus production minus closing stock is equal to units sold. I repeat, opening stock plus units produced minus closing stock is equal to units sold. So it will be 200 plus 3000 minus 400, which gives me a value of 2800 units. All the totals will be divided by units produced, that is 3000 tons. So the 20 value that you are able to see in the cost per unit column, it is 60,000 divided by 3020. Again 60 divided by 3020, you get a total of 40. 24 divided by 3000, we get 8 rupees. 144 divided by 3000 is 48. You can cross verify. 40 plus 8 will be 48. Further, in 48 we add office overheads 10, so we get cost of production 58. This 58 is very important, just because we have to value the cost of finished goods based on this 58. The value of opening stock of finished goods is given as 12,000. Now understand, this is based on last year's cost. You cannot calculate the value of opening stock. So don't bother about that. You will be given the value. But in the closing stock, if you remember the question, it was 400 tons and question mark. So we calculate 458. I hope you all understand where did we get our 58 from. So it values comes as 23,200. So the net value comes as 1,62,800. This is our cost of goods sold. Now how did 58.14 arrive? So this is based on units sold. So there is a distinct difference between cost of production and cost of goods sold. Cost of production, till cost of production, all the values will be divided by units produced. Whereas from cost of goods sold till sales, everything will be divided by units sold. In our example, it is 2800. So if you take your calculators and do 162,800 divided by 2800, I am sure you will reach at 58.14. Let us not forget the format. We have reached up to cost of goods sold. We add selling and distribution overhead, selling expense, advertising, carriage outward, 6,000, 4,000, 2,000, 12,000. Now again, 12,000, remember carefully, we have to divide by 2,800, not with 3,000. The units produced is not relevant for us henceforth. It's units sold. So we reach at the cost of sales of 1,74,800. Again, that would be divided by 2,800 to arrive at 62.43. Profit is a balancing figure. That is why I have written a star mark. Sales is given as 1,96,000. That divided by 2,800 is 70 rupees. So I get a profit of 21,200, which is 7.57 per unit. I hope you are able to understand. This is a very important question as far as examination is concerned, because I always feel this is one challenging part which can be asked for you in your exams. So you need to take care about the same. So we have done two types. One was basic cost sheet, the very simple one. Second one was cost sheet with stock, and that too we did valuation of closing stock. The third variety, as I speak to you, will be based on dual cost sheet. Actually, the concept of dual cost sheet is very simple. Dual cost sheet is two cost sheet which we are doing together. So if dual cost sheet is given, what needs to be taken care? Let us take an example and understand the basics behind it. Okay, they say administration overheads were 100% of the prime cost in each of the products. So when it is 100%, then directly whatever is your prime cost, that itself is your administration overheads. Selling and distribution cost per unit was rupees 6 for both A and B. Now we can understand when it comes to selling and distribution. In the previous question I explained to you, selling and distribution, when the cost, though it is same, the value will be different because the units sold of A and units sold of B will be very different. As I read adjustment number 6, it says 35,000 units of A were produced, of which 32,000 were sold. My dear friends, this is a very big trap for all of you. Here you get multiple things. Number one, you get the value of sales, 32,000 into 100, 32 lakhs. But one more hidden thing is, if I manufacture 35,000 and if I sell only 32,000, I have a closing stock of 3,000 units. Again, the concept of question number 6 gets repeated. I am having 3,000 units of stock of finished goods. So I have to value on the basis of cost of production. Again, cost per unit is very important. Same applies for adjustment number 7, where 30,000 of B were produced, 25,000 were sold. So obviously 5,000 is in stock. Let us. So your cost sheet now is getting bifurcated into two parts for product A and B. Produced is 35, sold is 32, produced 30, sold is 25. So first we start with direct material, direct wages. There are no direct expenses. We have calculated the ratios already. And the ratio was, if you remember, 7:2 and 7:4. And accordingly we calculate the prime cost, 11,55,000 and 5,10,000. Works overheads, we allocated the ratio already, 7:6. And we got that as 12,60,000 and 6 lakhs. If you remember, office and administration overheads were 100% of the prime cost. So according values were calculated and we reached at cost of production. I have just calculated for your reference cost of production per value because you need to definitely calculate material wages, prime cost, works overheads. But I just wanted you to concentrate. This is what we want. Because there is no opening stock, you will not see add opening stock of finished goods. I have directly done less closing stock of finished goods. Now for A, 3,000 is the units multiplied by 69 is the cost of production. And for B, it is 5,000 units multiplied by 37. So I get cost of goods sold as 22 lakh, 8,000 and 9 lakh 25,000. Here there is again an interesting part. When you divide by units sold, you get 69 and 37. Somebody may recall that the values were different in the previous question. Here it is same. How come? The logic is simple. Here there is no opening stock. There is no value which is changing the setting. So it continues. Selling and distribution overhead 6. So you get cost of sales. Sales are already given and the balancing figure is profit. My dear friends, it's a very simple topic. All you need to just and try to find out the logic. So these are the three types I repeat. Number 1 was basic cost sheet. Second one was estimated cost sheet, or rather cost sheet with stock with calculation of stock of finished goods. And finally we have dual cost sheet. I have shared with you my Instagram as well as my WhatsApp IDs. So if you need any help, just understand that there is a timing limit to which I reply to the queries. So ensure that you ask your doubt before that time, and in case suppose you get late and you just put in a message, I will ensure that in the morning I reply to you. Thank you. This is Dr. C. A. Vishwanathan signing off. Have a great day, everyone.